Many people go into tax season expecting a refund, only to find that it's smaller than they remember or missing altogether. In this video, we'll explain why tax refunds feel smaller than they used to, what's changed behind the scenes, and why this experience has become more common. Tax refunds are often treated like a financial milestone. People plan around them, remember past refunds vividly, and use them as a reference point for how a year went financially. So when a refund shrinks or turns into a balance due, it can feel like something went wrong, even if income stayed the same and spending didn't change dramatically. That disconnect leads to confusion and frustration during tax season. The central mechanism behind smaller refunds is withholding alignment rather than loss. A tax refund isn't a bonus. It's the difference between what was withheld from paychecks and what was actually owed over the year. When withholding is closer to accurate, refunds naturally shrink. Over time, withholding systems have been adjusted to reduce large overpayments. This means more income arrives during the year, but less comes back as a lump sum later. At the same time, rising costs reduce the impact of refunds in real terms. Even when the dollar amount is similar, it buys less than it once did, making refunds feel smaller than they look on paper. Households feel disappointed because refunds are often mentally earmarked for relief, savings, or catching up. Employers and payroll systems benefit from more precise withholding, which reduces large corrections at tax time. Governments benefit from steadier revenue throughout the year rather than returning excess payments later. The result is a smoother system overall, but one that feels less generous to households accustomed to larger refunds. Once withholding becomes more accurate, large refunds are unlikely to return without intentional overpayment. Refunds also don't adjust for rising costs. Even if income grows slightly, higher expenses can erase the sense of gain. Because refunds are tied to tax structure rather than household needs, they don't scale with financial pressure. That makes them feel less helpful over time, even when nothing appears wrong. For households, this means tax season now feels less like a reset and more like a reconciliation. Smaller refunds don't necessarily signal higher taxes or mistakes. They often reflect changes in timing rather than total burden. Understanding this helps explain why tax season feels different now, even when the numbers technically add up. Tax refunds feel smaller because money is spread more evenly across the year, and because costs have risen faster than expectations. This channel explains those shifts calmly and clearly, so financial changes make sense, especially during tax season.